like. We'll check how the income statements looks like. Here is the income statement in front of us, guys. You can see it here. This is the income statement for any company. Usually the income statements is done periodically for 1 year, but sometimes it's more or less. Sometimes if you're an owner of an entrepreneur, as example, or if an owner of a business want to know what he gets at the end of the period, like as example, how much he did profits and so on. But it's usually for the big companies and the big entities and the accounting entities, it's done for 1 year. 1 business year. So what are the articles of the income statements? And the income statements show you your financial situation in a particular moment. It show you your financial situation in any particular moment. So the first thing in the income statement is the sales revenues. Sales revenues. I'm not saying the production revenues, but saying sales revenues, which is the only number which is positive here in the whole income statement, because this number we start because our mission, or we are there just to sell. So the total revenues will equal 5,254. Here in this example, the total sales of the revenues, the total revenue sales are 5,254,000. Okay, we'll deduct from it cost of goods sold. The cost of goods sold, which we did before in the previous statement, and we mentioned the previous statement, like here, it will be like the starting purchases during the year, minus the allowances and minus the discounts, plus the freight and costs. That will give me the cost of goods sold, like I showed you in another, in the previous statement of the cost of goods sold. So we'll say now 5,254 minus 2,850. Let's go into it and see. Here it is, 5,254 minus, let's see, what is it? Here it is, minus 2,850, minus 2,850, minus 2,850. That will equal how much? 2,404. Let us go and see it. Now it's equal to 2,404, like what you see in front of you here, 2,404. Then after this, we'll go into the selling expenses. We will deduct the selling expenses and we will deduct the depreciation expenses. So 2,404 minus 1,065 minus 1,065, that will equal 1,339. Still, I'm just also minusing 240 for the depreciation, minus 240 depreciation, minus 240 depreciation. That will equal 1,099. That will equal 1,099. Here it is, the 1,099. This we call it operating profit. So starting like this now, we can arrange our talking and say gross profit. Let's go to a new equilibrium and say, because we have here gross profit and we have operating profits and we have net profit. We have 3 things. So the firstly, like you see here, the gross profit will equal the total revenues minus the cost of goods sold. So here we go. It will equal the gross profit, GROSS profit, will equal the sales revenues. I will enlarge it right now. Sales revenues minus cost of goods sold. Cost of goods sold. So this is the first thing here. The first thing I have to talk about here is just this one. Here we go. Let me enlarge it for you guys so that you can see it. Here it is. So gross profit will equal the sales revenues minus the cost of goods sold, like you see here. And that was the first point. This was the first point. Gross profit will equal the sales revenues minus cost of goods sold. Now, to get the operating profits which is in black here will equal the gross profit minus the selling expenses and depreciation expenses. Here, selling and general administrative expenses. Selling and general administrative expenses. Minus the gross profit minus the selling and general administrative expenses, and minus also depreciation and amortization. So this will give me operating profits. So now I would say the operating profits, the second thing, operating profits will equal the gross profit, which we had before, gross profit, like we said before, gross profit minus the selling and administrative expenses, and minus also minus depreciation. So the operating profits will equal gross profits minus those two. You can also make it like this. Minus selling expenses plus, instead of this minus, you can make it plus. Sorry about that. Plus depreciation, then I will close this bracket. So simply that means that you will deduct the gross profit minus the selling expenses and the depreciation expenses together. Okay, then this will give you the operating profits, like what we did here exactly in front of you right now, like what we did here in this example in front of you. The operating expenses will equal the gross profit minus the selling expenses and depreciation. The gross profit was 2404 minus the selling expenses was 1065, and minus the depreciation expenses were 240. Then this will give me the operating expenses. Then to reach to pre-tax income or income before tax, to reach to income before tax or pre-tax income will equal the operating profits, which is 1099, minus the interest expenses. That will give me pre-tax income. So the third equilibrium today, the pre-tax income or income before tax, pre-tax or income before tax, pre-tax income will equal the operating expenses minus the interest expenses. Minus the interest expenses. So the pre-tax income will equal the operating expenses minus the interest expenses, which will equal also as well. Here it is. I have here the operating expenses, operating profits 1099 minus 102. That will give me 997, the tax before income. Then I will deduct the amount of taxes, which is 209. So 997 minus 209, that will give me the net income. So the net income will equal the loss equilibrium. It will be like this. Net income will equal pre-tax income, minus the amount of tax. So this will give me net income or net profit. Net income or net profit will give me pre-tax income minus the tax amount. Like you see here right now, the pre-tax income was 997,000 minus 209. That will give me the net income of $788. So these are the components of the income statement in a detailed one. And here again, I would say will equal the total revenues minus the cost of goods sold. That will give me the gross profit. Gross profit, I will deduct from it the selling expenses and depreciation and amortization. I will deduct both of them. So I start here. That will give me the operating profit. Operating profit, I will deduct or subtract from it minus interest expenses. That will give me pre-tax income. Then I will deduct or subtract the taxes minus the taxes. That will give me the net income or net profit, which is 788. Of course, this is the available for, as example, for expanding, for dividend share, by other meaning that I will use this net income freely after I pay the taxes. But I cannot use the pre-taxes. As example, if I have expansion in the business, I cannot do it before pre-tax income. I have to pay first the obligations of the country. Then after this, I go to the net income. Again, I will say total revenues minus cost of goods sold, that will give me the gross profit. Gross profit minus selling expenses and depreciation expenses, that will give me operating profits. Operating profits minus the interest expenses, that will give me pre-tax income. Then pre-tax income minus the taxes, that will give me the net income. That was the income statements in more details. Thank you so much.